What's going on, everybody? My name is Zach Hartley and welcome back to my weekly watch list video. In this one, I am going to share with you all of my open positions. I am also going to walk you through how I feel about the current market conditions and what we need to watch for. And then I'm going to dive into the stocks that are at the top of my watch list going into the week ahead. So without any further ado, let's jump right in. Okay, so these are all of the positions that I am currently holding in my kind of short-term portfolio here. I just took a swing trade in Amazon about a week and a half ago, and then on Thursday, I believe it was, I got into both Coursera and Udemy, and then I've been talking about and trading Datadog and Cloudflare, ticker symbol NET here, for a little while now. Both of those positions are doing okay, and the new positions that I just entered are all up 2 or 3%. So overall, the swing trading portfolio is looking pretty good. I did get stopped out on Alibaba about a week or two ago, but other than that, things are going in the right direction. Now, when it comes to the NASDAQ, we are definitely in a new bullish trend here. We have consecutively higher lows, but we are starting to approach some previous resistance from the summer of last year. So we're gonna have to watch this kind of 13,000 level pretty carefully to see if we can actually get a clean breakthrough here. Now, when it comes to the S&P 500, we are also approaching a pretty key level of resistance that we approached back in the summer of last year. And when it comes to the Dow Jones, we've been kind of consolidating at that same level for at least 6 months, if not 8 months now. So it's going to be really interesting to see what happens in the weeks ahead, because we've recently had some big news on the economic side of things that we're going to dive into 1 second. But I just want to cover Bitcoin real quick. We are in a bullish or a bearish trend, sorry. We have consecutively lower highs right now, and we are moving in a downwards direction. We have crossed below our moving average. Our MACD is below 0, and volume is very clearly getting lower and lower. So definitely something to keep an eye on here. We are also seeing a similar trend with the price of commodities in general right now. There's some concern that the economy is slowing down, and therefore there's going to be less consumption. Therefore, there's going to be less demand on the actual resources themselves. WTIC stands for West Texas Intermediate Crude. It is a light crude. Basically, it basically represents the price of oil in certain areas, and it is down pretty drastically over the last year. So it is another thing to keep an eye on and a possible opportunity to trade. Now, when it comes to earnings this week, we have a couple of different companies reporting. We've got NEO on Friday. We also have GameStop and DocuSign, some technology companies here, and then Braze. Braze is a company that I just kind of learned about in the last few days here. I dove into their financials, and we're going to talk about them in 1 second. But first, let's talk about what's happening in the economy and the market conditions. And the number one story that you need to know about, you need to be focused on, and you need to understand is that the debt ceiling has been raised. This was a huge confrontation and kind of a melting point or a turning point in the U.S. economy, where if this debt ceiling didn't get raised, the U.S. would be defaulting on some of their debt, and it would not be a pretty picture for the U.S. economy. However, that debt ceiling did get raised. It kind of just put a band-aid on the situation and sort of pushed it further down the road. But it has prevented a collapse, and it has prevented more and more uncertainty and risk. So that is a good thing that just recently happened here. Last week, we also got some data that the U.S. added lots of jobs in May, and the unemployment rate is now at 3.7%, which historically is extremely low. That is the sign of a strong economy. So that is really, really interesting here, because it means that the interest rates that the Federal Reserve is controlling maybe haven't had a huge impact on employment yet. Now, the Canada interest rate announcement is going to be happening on June 7th, so that's this week coming up. And then the US is announcing theirs on June 14th, so that is going to be next week. But what's interesting is that right before their announcement, we are going to get information about inflation. Inflation is one of the key things and the reason of why they are raising interest rates. And so if inflation comes in higher than expected, meaning that it's not slowing down, that would cause or likely cause the Federal Reserve to continue to increase rates. That could put some pressure on banks, and it could put some more pressure on anybody with a lot of debt. And so that is sort of the dynamic of what is going to be happening over the next few weeks. Is debt ceiling has been raised, which is great. We've also got inflation data coming out. We've got CPI. We've got a bunch of other factors going on. And then on June 13th, we're going to figure out what the Federal Reserve is doing with interest rates this go around. Now, like I mentioned before, Braze is a pretty exciting stock. They have been absolutely hammered. I think the stock was trading actually in the 90s. Then it was trading in the 50s. Then it was trading in the 20s. And since then, it has formed consecutively higher lows, consecutively higher highs. It is trading in a little bit of a channel right now, but it does look like it may have found a bottom, it may have found support. And the reason that I'm interested in the company is because it's trading at a reasonable valuation. I'm not saying that an 8 times price to sales is a good valuation. I'm saying it's reasonable for the amount of growth that we're seeing in this stock, because this top line revenue growth is super impressive. If you look at the revenue growth quarter over quarter, it is not only consistent, but it is accelerating. It is looking really steady, and the gross profit is increasing as well. And when you look at just the margins here, it's a very easy path to profitability. As long as they can continue to increase the revenue, they can keep their margins roughly the same, and as long as they're not drastically increasing their operating expenses, which over the last 3 or 4 quarters here, they have not been. It's gone from 88 to 91 to 93 to now 100, all in the same time, while their revenue has gone from 70 to 98. So overall, the company's revenue is growing much, much faster than their operating expenses, which gives you a very clear vision to profitability. So I like this company. I'm putting them on my radar. And if we can see good support here and a clear breakout of this trend, or a breakout above this kind of barrier, or another bounce off support, I really like Braze. Now, like I mentioned, I did buy into Coursera. You can see my trades right here. I bought in on the breakout of this resistance and the bounce off of the support. I don't think it's too late to buy into Coursera. If you want, you could wait for some more breakouts of previous resistance here. Again, the stock was trading up in the 20s. It fell all the way down to $9. We bounced off it basically twice here, October of last year and May of this year. And so I like the company. I think they're going to do well long term. I'm looking at this as a possible entry where I have a tight stop loss on this. So if I'm wrong, I get out of it quick. But if I'm right, I'm going to let this baby run for a little while. Sort of the same strategy here on Udemy. I like the company. I think they're doing well. It was trading within a channel. It broke down. It found support, and now it's breaking back up through resistance. That's the trade. That's what I'm going in on. So far, it has worked out well, but it is very, very early days. I have a tight stop loss on both of these trades. So if they pull back drastically, I'm out. I'm out. I will find a different entry point. But if they run, I'm going to let them run, and I'm going to milk them for all the profit that I can get. Another company that I like right now is Tesla. I watched the entire basically last presentation that Elon did. I think it was like the Q1 updates, and they talked about just all the different business models. And it's actually pretty impressive what they're doing. I can't say that Elon does everything right, but when you look at the kind of master plan that he's building with Tesla, they have all of the bases covered, and now they just need to scale up. And I think it's really, really exciting what they're doing. So if you can get in at a good opportunity, we saw the bounce off 100, we saw the rejection at 215, we came all the way back down to 150, and now we're back up to 215. If we can continue to break out at 215, I think you're looking at a pretty good time to get into Tesla for the long term. And then the last thing that I want to point out here is that a few weeks ago I said FootLocker is going to die. This company is not going to be here in 5 to 10 years. They're going to get bought out. They're going to go bankrupt. Something is going to happen. But this company is not going to be here. They're just not competitive enough when they're going to be competing against the actual shoe manufacturers like Nike and Adidas, which are opening up stores all over the place. And so I think FootLocker is going to die. This is the chart that I showed three or 4 weeks ago, and this is what the chart looks like today. The stock dropped from like $40 when I pointed it out. It's now trading at $25. I think it's got room to go lower, and if you want to learn how to do this, you can definitely check out my completely free stock market course. It's hosted on Skillshare, and you get 1 month totally free when you sign up with the link in the description to this video. That link will take you to Skillshare, where you can create an account. You will have to put in a credit card, but you get 1 month of unlimited access to every single course that is on that platform. And it's literally like Netflix, where you can take as much content as you want. You can binge watch as many courses as you want, and they are all expertly, professionally done. So I highly recommend it. The link is down below. 14,000 students have gone through the course already, and there's over 400 reviews for you to take a read through. So I promise you, it'll be the best free resource that you can find online. Thank you guys so much for watching this video to the end. I sincerely appreciate it, and we'll see you in the next one. Good luck trading, good luck investing, and we'll talk to you soon.